Good morning, guys. It's Baby Trader First Community again. So let's do a quick recap of, or a continuation of the last video rather than little examples on it. So I told us we'll work with the candles and just two simple stuff: impulse, correction, and impulse. So let's go. So for the bullish market, you need something like this. For the bullish market set, you need something like the bearish market, I need something like this. This is the last corrections leg. Yeah. You just need market to come, impulsive push, close below, correction, and impulse. Then you look at this extreme for either of the four candles that we trade, then you put your sell limit there to go short. Go short. Then for the for the previously bearish market turning bullish, you need to see something like this. Like this. This is the last correction leg to the upside, to the downside rather. So you need your market now to come up, close with a full body candle close above here. That's the first impulsive push, correction, and an impulse. So something similar to this. What do? You look at this extreme leg. Look for either of those four candles. Then this big market come back here for you to engage and go bullish. So always look impulse, correction, impulse, correction, impulse. And that last correction leg, you need a full candle close below it. Then give you an impulsive push, correction, and an impulse. And look for either of the four candles there. And then so let's check some of the pairs I traded this last week. So NAS 100 should be first on the list. NAS 100 should be there. That's US 100. Sorry. So if you look previously, this was the bullish market. Our doji from the market drop. So that was not like a point of interest for me. So I just came down. I saw this push. I knew market should respect it. So I came to 1 hour charts. 1 hour candle on this particular day. Good. The doji previously was a little reference point to an extent. This doji here was a little reference point for me. We'll talk about that much later. So I was on 1 hour charts. Then what did I see? Like I pointed out, if you look at this place, you need to see this push, then this violation, this first impulsive push. That was it here. You zoom properly, you see it here. The impulsive push, correction, the impulsive push, correction, and this final impulse. And this market now changed the correction, closing below this last correction leg here. So if you see now, we had this impulsive push, came up for the correction, impulse again. That's it. Impulse, correction, and then you had this impulsive push, correction, impulse. That's it here. Impulsive push. This first push here, impulsive push here, correction, and impulse. Then I told us, look at the extreme block for either of those four candles. If we look at this place properly, now what candle do you see? You can see the inverted hammer there. That was my entry. There it goes. So that was it. That was my entry point here. Can you see the nice push to the downside? That was it. The market came down this way. What did you do? I think I took 1 to 6. I left the market. I left at 126. 126, I think so. Yeah. 126. That was it. It went up to 10 hour reverse. I left at 126. That was where I left. Into somewhere. Yeah. So that's it. So always look for the first impulsive push, correction, impulse. That was US. This was the first trade I took last week. That was on triggered on Tuesday. Then I think it hit TP on Wednesday afternoon. Then I think Euro. So I missed every asset of it. Let's walk through them. Let's walk through them. Let me check. GA. Can't remember the pair now. Can't remember the pair yet. Can't remember the pair now. Okay, card session. Okay, good. We are good. Think good had something similar. Good had something similar. Good. Same way I told us. The last corrections leg should be taken. Then saw this push. So I had this first, what's it called? This was the last correction leg. Market closed above. Impulsive push. Correction. Impulse. You look here now. Looks like a hammer, but it's not so perfect. Inverted hammer rather. I marked it and that was it. Impulse, correction, impulse. Look for either of those candles forming. Go on. So that's that. So this is a framework. This is a framework, guys. This is a framework. You just need to see that push, first push, correction leg, second push. And I told us we have 4 candles. If you've not seen the video, go watch that video. Just 4 candles. Look for either of those candles at the extreme and you engage. That's for the selling market. Then for the buying market, need to see something similar to this push that will take out the last corrections leg. So everything we'll do here is just impulse, correction, impulse, and candles. Nothing serious. Once the market closes below, what do you anticipate? Little correction, then an impulse again. Then this extreme leg, the origin of that first impulsive push now. Look for either of those candles there, either of the 4 candles that we trade. I think the video on the candles that move the market, I talked about the candles perfectly well. But once you've seen this impulse, correction, impulse, you've seen either of those candles, your engulfing candle, the rest of what do? Place your limits there. That's it, guys. So watch, comment, then anyway, you're not so clear, drop questions, and I will attend tomorrow. So, all right, guys, stay put.